Hi, I'm Dave Brickell, Director of Sales at Paradigm. Welcome to The Big Picture.
Vol is reverting. So the obvious trade is always the expensive one to
this
carry.
whole peak inflation, peak rates narrative, peak Fed, which we've been talking about.
It's an expensive place to find out. Crypto vol, a potentially fatal place to find out.
The crypto option markets are definitely showing some signs of life. Hi guys, welcome to the. My name is Joe Cruey. Paradigm in the weeds around everything crypto vol markets. I'm joined here by my colleagues David Brickell in London, and today we have Chris Newhouse from GSR back on the channel to discuss crypto vol markets over these crazy past 2 weeks. And before we begin, if you like this content so far, please hit that like and subscribe button. Really helps us as we continue to grow the channel. And Chris, I believe you were our first ever guest on this podcast. You could quickly reintroduce yourself for our newer viewers. We think that would be really helpful.
Yeah, sure. So a little bit of background about myself. So I joined GSR May 2022, and I'm on our OTC trading team focusing on spot and options markets. In my free time, I write educational content for you guys over at Paradigm. And then I also write a weekend recap on the vol markets for Deribit as well. So very, very focused on crypto vol. And you're absolutely right. It's been a very chaotic past couple of weeks, but that's probably going to make for some good content. So
yeah. But I kind of feel bad last week. You know, given not the guilt trip you, I know you were skiing, but I mean, a lot has happened these past couple of weeks, and yeah, we definitely missed one here, but we're gonna make up for it today.
Yeah, we were saying just before we come on, it was unbelievable. I went away skiing on the Friday, landed in Bulgaria, and the world had blown up. And typically, the week you're away, that everything's going on. But you know, it's cool. Like we'll get into this, but you know, I think it's super exciting. You know, well, we certainly at Paradigm like the volatility, and B, you know, this for me is certainly the kind of long-term macro thesis playing out for crypto. What we're seeing, and yeah, it's kind of fitting nicely into some of the themes we had coming into the year.
Yeah, absolutely. Let me share my screen. I got a couple Indie slides for us. Well, it's only been, as we kind of said, you know, it's been 2 weeks since we last filmed the big picture, but in that time, it kind of feels like we almost lifetime in a sense. And I think it'd be interesting to kind of just set the stage, you know, since we last filmed on March 7th or March 8th, I think it was. Since then, BTC is up 26%, has a year-to-date Sharpe ratio of 275, which is the best risk-adjusted performance out of all global everything. And the BTC Gold 30-day realized correlation has increased from zero, not correlated at all, to 50, while the BTC S&P 30-day correlation has decreased from positive 30 to now like a negative 20. And in terms of what happened in vol, you know, the entire, you know, BTC at the money term structure, you know, trades above 60 vol. It's fairly inverted, and a couple times over the past few weeks, you know, you had it reaching 100 vol. You know, you had the short data implies hitting 100 vol, and then also, you know, you look at the BTC ETH implied spreads. You know, some of those are now negative now into the March and April buckets. So, and then in terms of volume, you know, the 24-hour Deribit volume, I think, reached like 2.5 billion. You know, which is the highest like in 2 years. So Chris, like let's get into it. Like, I'm curious to hear like your thoughts around what you've seen over the past 2 weeks in the crypto vol markets, as I think we'd all agree that this like digital gold narrative is starting to take hold a little bit.
Yeah, no, definitely. I really think that the digital gold narrative, people bring up, they brought it up occasionally, but I think it's really starting to pop back up, right? Like you have on here, correlation to gold's increasing, Bitcoin and SPY decoupling. I also think that there's true big believers in crypto, right? Some of the niche funds with capital who are even more interested in Bitcoin now, given the banking situation. So the reason Bitcoin was created, the whole ethos of it, is to have a transparent, trustless, and decentralized monetary system. And I think with the events going on now, it seems like it's more in demand than ever. So it's very crazy to me, though, the Bitcoin ETH kind of decoupling in the vol sense in terms of Bitcoin trading at premiums to ETH, right? Like there's the whole Shanghai narrative coming up. And I always thought it was I personally always thought like the Shanghai narrative might be kind of a non-event, but maybe that's a great opportunity for a relative value trade here. I do think, however, though, like this really shows, I mean, with the monetary policy going on and the emphasis on the banking system, I do think it makes sense that Bitcoin is in the forefront of everyone's kind of view right now, right? Like the upcoming Fed meeting is coming up, but it's mainly going to be based on the projections that come out of this. And I think that Bitcoin's narrative and kind of quintessential ethos of the decentralized monetary system is kind of what's kept it in the driver's seat in the spotlight right now.
Yeah. No, I think that's totally right. And I mean, we've heard a lot, we've seen a lot of research and around, you know, the Shanghai Merge. And I think Chris and you and I had discussed in DM a little bit around, hey, yeah, like nobody's really focusing on this. Like if you just look at the flows lead time, right? Like you could barely bid for the ETH vol these days. It's really, really difficult to bid for ETH vol out there, right? There's been so much demand for BTC, especially on the upside. We have very, very rarely seen that come into play, you know, in ETH. And I would say more of the flows have tended to skew on the side of selling ETH. Maybe there's even something to be like, hell, like this narrative, I need to own the Bitcoin ups. And because of that, I kind of need something to sell against it if I don't want to just, you know, potentially ride these things, especially as, you know, we've been experiencing the spot up, vol up. And now that being realizing, but like, you know, just owning outright upside without, you know, doing something against it, you know, potentially has some implications around carry where it's just like, I don't know, you can potentially bleed a little bit.
Yep. I mean, that makes sense.
Yeah, I think as well, like traders. God, I'm opening myself up here, but traders are pretty simple animals, right? In many ways, and you want to keep these things as simple as you can. And like Bitcoin right now is the cleanest trade, because not only have you got with Ethereum, you've got the Shanghai upgrade, and I mean, God, we've had kind of discussions on here about what we think that means. But also you've got you know, Gensler and, you know, labeling everything but Bitcoin a security. So you've got all these things that muddy the waters. But if you want to play this kind of monetary you know, fiat system blow up trade, and all the issues that are going on with US monetary policy, Bitcoin is just the cleanest shirt to stick on.
Yep.
It feels like Bitcoin, as you guys were saying too, is, you know, the main game in town. And we had mentioned on the big picture in January that, you know, Bitcoin option volumes were starting to outpace Ethereum. And that narrative has only really continued to progress with, you know, BTC volumes 70% of the total volume so far in March. So 70% Bitcoin, 30% Ethereum. And that top chart, you can see it as the last bar on the right. And remember back in August last year, you know, this relationship was flipped. And, you know, we heard this term being coined around, you know, the ETH volume flippening and, oh, this is Ethereum's moment. You know, this is where the volumes come to the forefront. But it really has done a complete 180. You know, Bitcoin's back in that driver's seat where really the only flippenings that we're actually talking about now are ETH vols trading under Bitcoin, because there's just so little demand to own ETH optionality these days. And Ethereum, it's been a complete nothing burger in comparison to Bitcoin this year. And, you know, no one really cares about the Shanghai event, and kind of rightfully so, right? You know, just given the macro setup, right? Like, do you guys think that Ethereum is going to continue to be overshadowed by Bitcoin, or is it kind of just like a function of the narrative where, you know, it kind of is this perfect storm for, you know, Bitcoin to rally as of now? So, you know, that's kind of what we're seeing. But do you guys think the Ethereum volumes are going to come back, or, you know, Bitcoin is just going to be the main show?
Yeah, I mean, my view, Joe, definitely is that, you know, I always say, like, markets are driven by narratives, always. And it's so important and often overlooked. And not, like you say, right now, the narrative for Bitcoin is super, super strong. That will fade, you know, as things settle down, in certainly in the banking system. I think then we see a rotation, and then you start to sort of focus on some sort of crypto idiosyncratic stories and narratives, and then maybe the Shanghai upgrade becomes the focus. So I do think that will fade, and we'll kind of switch. But right now, it's just it's kind of the easier trade and the cleanest one I think for people to focus on right now.
Yeah, exactly. It's just, I guess that's just the perfect recipe to own upside, and that's certainly the flows that we've been seeing. The money printer, quote unquote, is starting to unwind a little bit. You're seeing BTC act as this, hedge to monetary incompetence. I think QCP put that in their channel. That's a quote from them. The increasing monetary debasement risks, and then you have the short. We'll get into this later, Chris, but like the short gamma above current spot levels, and last week, I mean, obviously the vols are higher now, but last week, the implieds were trading in the high 50s, versus 7-day trailing realized of 85 vols. Like, I don't want to be Captain Hindsight over here, but like it kind of seemed like it was the no brainer sort of trade, and that was certainly the trades that we were seeing. I mean, if you just look on the screen, all those outright calls and call spreads trading on us, and the only large downside prints that we've been seeing on Paradigm have been selling out of puts that, guys, puts that were being bought, as the Silicon Valley Bank news was really starting to pick up. And you did see that reach for a protection, but, given that is not really, a risk as much anymore, we saw guys kind of selling out of that stuff. And I think the most meaningful print that we saw last week was the one that I highlighted in green. So we saw 900 Saturday expiry, 25.5K calls. These were bought on Thursday, right? So somebody is effectively buying these to kind of like engineer like a sort of squeeze. That's kind of how I look at it. That is like massive size in short dated options. We saw this exact same narrative back in January where people, I think it was like the Jan 26, like 18K calls or something. Somebody bought these things that they were expiring like in 4 hours. Somebody bought like 1,000.
Yeah, I think they were expiring before the CPI print too. So they were, that's the biggest thing. I saw that as well. I was at like a basketball game and I'm looking at some of these flows pop up and I'm like, wait a second, this isn't actually going to cover CPI because of the Deribit expiry. So yeah,
and because they didn't capture the CPI, I mean, they got a better entry point because the implieds weren't as jacked. But like, we've seen all these massive upside flows, and then you see like this one where it kind of just feels like this is like the what do they call it, like the piece of hay to break the camel's back, in a sense, right? Somebody buying these Saturday options, and then we put it in our commentary as well. We saw this and we're like, we're about to go. Right, we're about to run. And that's exactly what happens. Not to pat ourselves on the back here, but I guess given that the vols are higher, we have rallied a bit now. Like, what is your implementation of choice? If you're trying to get upside in this market.
Yep. So for me specifically, and this is literally what you're seeing on the flows as well, is these outright call buys have transitioned into call spreads, right? So with implieds trading at massive premiums compared to a few weeks ago, exactly as you're talking about. So I think in the previous slide, we were like, oh, you could sell ETH against it, things like that. What we're actually seeing is people taking advantage of this massive call skew as well. They're just turning them into call spreads, right? So whenever we're at these highly elevated levels of implied vols, call spreads are kind of negating the impacts of theta, kind of the Vega exposure as well. So I think it makes absolute complete sense that a lot of these outright call buying, the flows have turned into these massive call spreads. And the biggest thing for me is like, there's decent size coming in for these call spreads, obviously, and then it's the strike ranges that they're choosing. So I think even yesterday, it's not as big as some of these call spreads, I think, but there's some interest in the 42, 55K call spreads for later dated expiries. And I was like, okay, wow, if people are starting to get that bullish, like, you obviously don't have to hit those strikes to get into profit, but with people kind of taking on these positions right now, I'm like, okay, there's some bullish thought process going through these buyers right now. People have transitioned from outright calls directly into call spreads. And I think it makes a lot of sense right now. So if I wanted to kind of take this directional upside, I'd probably be putting on call spreads right now if I wanted to bet for further upside.
Yeah, no, I think that makes total sense. But it's kind of one of these risk reward things, right? Like, you're not going to have, especially with like these June's 40Ks, 45Ks, you're really not going to have that convexity really kick in yet.
Yeah.
And look, I mean, we moved 25% in like 2 weeks. This is a June expiry. 45K ain't so far away. But like, as you said, these are the reasons why you are able to extract these amazing payouts. And the vol of all that we've seen has just been so dramatic, Chris. Like, dude, we were talking like literally, like as the Silicon Valley Bank news was going out, the puts were trading like 20, you look at like 25 delta skew, and then you have like puts 8 vols over calls, and then you look like 2 or 3 days later, you see this complete reversal, and it's moved like 16 points in like the opposite direction. It's absolutely crazy, this market.
Yeah, I went to like Amber Data's like some of their charts, and I was looking at regarding the skew. It was like one of the quickest flips I've seen, and it was also in longer dated tenors as well. So I was looking at like 6 months out, right? It was wild. I think we were like puts trading 7 points over calls for 6 months expiry. I think the only notable times I've seen such a quick flip in skew was the week of FTX. And then the week, like we were talking about, of the January CPI print to take us back above 20K. But I really don't think that there's been a magnitude of that level in terms of flipping for skew in quite some time in terms of like the short datedness of it.
Yeah, no, that go on, David.
Yeah. I was going to ask just something on that. Because obviously we talk a lot about positioning and flows, and one of the things that struck me, given the moves over the past week, I mean, and particularly cross asset, I mean, you know, we're talking about this in crypto. Some of the moving rates have been like just equally sort of mind blowing, and perhaps more so. Well, one of the things I was interested, Chris, from a trading point of view, and from the trading desk, like obviously we're witnessing a big sort of VAR shock, and I know back from my days, everyone wants to start strapping on risk, and then you get the tap on the shoulder to say VAR shock. We've all got a gross down risk, even if it's stuff you've got on that you like. Everyone needs to reduce positioning. Are you kind of seeing any of that, or even experiencing any kind of pressure just to generally kind of gross down on risk, or how's that working for you?
It's mainly been from what we've seen in terms of flows. It's mainly a lot of these kind of out of the money calls. And I think we'll probably talk about in this gamma exposure. There's a lot of demand for out of the money calls and out of the money upside last week. A lot of people put these on 25, 26, 28K strikes. Those immediately get hit in the money. And those people who are kind of short gamma are either forced to cover or, you know, forced to cover or forced to go through like being able to monetize it through delta hedging. So we've kind of seen like some people literally just outright close some of these and cross the spread on either Paradigm or Deribit and kind of downsize some of their risk exposure for some of these short dated gamma positions expiring in March 31st, 24th tenors and things like that. So that's kind of what I'd say in terms of we've seen a lot of closures of some of these like call positions that were opened a while back.
Yeah, that makes total sense. I mean, the vol has been absolutely crazy, and I think part of this is also just driven by the fact that we're also just seeing larger clips than like previously, right? It kind of felt like, okay, like, you know, if you want to get like a decent clip off in your BTC upside, you know, you'd see like 250 contracts. But as soon as we really started to go through like 26K, and I think this is indicative of the crypto option volumes also picking up dramatically. Like now those clip sizes go from 250 to like 500,
yep.
Right? So dealers are getting shorter upside, shorter gamma, because, you know, that 25 delta call that they sell like immediately becomes like a 50 delta.
Yep.
And then as you can see on the chart on the right, management of delta hedges it's been a complete nightmare. Like we are hearing it constantly from market makers where this like, dude, like we can't put it up at this level because like as soon as we go execute our deltas, this is gonna go 400, like 300 points in our face, right? And so this is a good chart by Kaiko. I really recommend these guys if you're looking for not a promotion or anything from them, but if you're looking for, you know, research on, you know, bid offer and spread liquidities, especially in the spot markets, it's really, really good stuff. But you look, especially since Silvergate, I mean, obviously it took a dive after FTX, but then you have Silvergate, SVB going offline. You know, these are very important on-off ramps for crypto, right? So you have that happen, and then liquidity dives even further. And, you know, this has been indicative in the wider bid offer spreads that we've seen in the option prices, yet people don't really care, you know, to really lift this stuff. You know, we're seeing markets that are trading like 5 vols wide, and the demand for this upside has been quite insatiable, whether, you know, that is just through like genuine taker interest or quite frankly, some dealers, you know, covering offside positions. We've seen some of that too. And then also just a fair amount of rolling activity, you know, out the curve of upside that has performed well. But I mean, Chris, if you look at this chart on the left, it kind of seems, you know, assuming that you have this assumption that, you know, the G vol GEX is correct.
Yep.
And I think in general it does quite a good job. Obviously, it doesn't take into account, you know, the OTC flows, where I would imagine most of that is supply. I know there's a big Bitcoin miner out there, you know, that, you know, sold a lot of like 25K strike, you know, last month. I know we're away from that now, but the point is, you know, there's a lot of stuff that GEX isn't really able to capture. But like, kind of, what's your view? Are we kind of like peak short gamma, like this chart is suggesting?
Yeah. So I love the chart in combination with the spot liquidity, right? Because I think the reason gamma exposure is so important in crypto is, you know, you've nailed it on the head here. Spot liquidity isn't as deep as it is in FX or traditional markets. So whenever kind of people go to execute these delta hedges, they really have to be cognizant of the size they're putting onto the options market, right? Because these quick systematic spot buys and TWAPs actually can have an impact on price, right? And if that price just so happens to be at like a level causing liquidations in the derivatives market, you can kind of get one of those tail wags the dog moment between derivatives and spot, and boom, you see some explosive price action. So I think that gamma exposure, when combined with looking at spot liquidity, looking at liquidations, and then, like you said, not just taking it, you know, surface level, there's definitely OTC flows and things going on like that. I think it does, you know, make a pretty interesting kind of chart to look at. You know, I think in terms of what we're seeing here, anyone who went short vol that weekend, you know, a weekend ago, or overwrote calls, you know, got absolutely blown out. And kind of, as you pointed, spot liquidity is at all-time lows. And as we've kind of seen, outright closure of some of these upside calls, even though there's a massive vol spread, has definitely started to kind of pop up and happen. Most of these calls were like very short dated 2-week calls, like March 31st, March 24th. We even saw that March 18th thing that you kind of highlighted in the last chart as well. So very, very heavy exposure to gamma, and with gamma performing and a squeeze coming up, you definitely start to get scared whenever you approach these short strikes, right? The 25, 26, 28, and it just causes this massive move that's kind of popped up over the past week.
Yeah. I mean, this market, it's just like the most reflexive market that I've ever seen. And I know we're focused a lot on microstructure, on the big picture, but you know, you really have this, like, in crypto vol, this maker taker supply demand imbalance. Because like compare it to like traditional FX. Who are all the big makers? You know, all the big makers, right, are like, for example, the big banks that have these massive balance sheets. It feels like a lot of the time the bigger quote unquote balance sheets are on the taker side, you know, in crypto, right? It's not like you have these guys that have these massive wallets, whether these are high net worth individuals, you know, guys that got into crypto like in 2009, 2010, accumulated all this massive size. And then on the other side, you have market makers that are not necessarily banks, right? That are kind of just market makers that are funded by, you know, like VC investors and things like this. So because of this nature, you have these massive wallets that are able to just basically like assert their dominance effectively, like on makers, and really just, you know, move things very quickly.
It feels very very much like the old kind of macro world, like really before kind of volatility got killed in the rates and FX space, sort of in the QE world. And those old days, like, you know, some of the big funds move, you know, once they see a narrative, a theme, they press hard, and because they know they're playing for these big moves. And this is certainly, if you're a hedge fund, right, it's these moments where you make your money. Most of the time you're kind of just treading water, and hoping that you don't kind of bleed too much during those quiet moments. So when the moment comes, when the lights come on, you've really gotta sort of push the pedal. And I think that's what you're seeing, right? And it feels very kind of almost like old school macro, but you know, the way markets used to trade, you know, in the heyday when hedge funds really sort of sprung to prominence, you see in those opportunities, and markets trade that way now. The opportunity comes up, and guys are just really hammering it, and sort of going relentlessly after it.
Yeah, it completely makes sense, especially with kind of what you're saying. You know, Joe, you just talked about it. Like, these clips have gone from, okay, you know, 250, couple of clips there. Now they're like 500 clips, and you're getting done with 2,000 Bitcoin in a couple hours. So it definitely makes sense.
Thing is, as
Yeah.
well, I mean, it'd be interesting to get get one of the hedge fund clients so on here, but when you've got a mandate that's sort of focused on essentially Bitcoin, certainly if it's more directional in nature, you can't not be involved in this move. You're particularly when most kind of prospectus is going to be around for the digital golds, kind of ideology, the sort of blow up of the fiat system. If when that system starts to fall apart and creak, you've not got sufficient risk on and exposure to it, then why the hell am I sort of paying you as a fund to sort of manage I just buy and hold Bitcoin myself. But
Right.
if you're paying a fund to sort of 2 and 20 or whatever to manage that, you've got to strap it on when things start to move, and you've got to have the exposure. And I think that's kind of what we're seeing.
Yeah, I think you're hitting the nail completely on the head here, right? Like Bitcoin is finally performing as a diversification hedge it was designed as, right?
Yep.
Not like performing with like a correlation of, Ethereum Nasdaq of like 80 or Bitcoin S&P of like 50, right? And a sustained significant outperformance like we're seeing now is only going to strengthen the case for those to gain exposure to this asset class, as long as they can become comfortable around custodying the asset and these sort of things. And it ties back nicely into the previous point. Like with liquidity in its current state, it does not take a lot of belief to get this thing moving. When you see 2% market depth in that right chart, where it is right now, you don't need a lot of demand for this stuff to really get this market going. And I think something on the Delta One side that's pretty interesting is the futures open interest. It's increasing, yes, but it's not like significantly increasing, at least when compared to like previous rallies. And the funding levels are not blown out, right? It kind of suggests that this rally is spot driven. Right? This isn't people reaching for futures and okay, I just need to get leverage to this. No, this is people actually buying Bitcoin in spot. And you see this through the address data, right? You see this through there's an increasing number of addresses with non-zero balances. That number has continued to go up, and long-term holders are holding for longer. Do I think that we're going to be at 1 million? I forget that guy's Twitter handle. Do I think we're going to be at 1 million in 3 months? No. I hope we're not, because that's going to that infers this Mad Maxian existence. Yep. We better be reaching for our shotguns if Bitcoin is $1 million in 3 months. But it does feel like this upside is quite asymmetric, especially now that you have these new narratives emerging around global banking vulnerabilities. And I think this is a good segue into David's macro here. What's your view? I know that Fed is going to be done by the time we put this thing out, but what's your view from here?
Yeah, I mean, we'll see what the Fed do a little bit later, but look, I think fundamentally the problem with the banking sector is that Fed rates are too high, right? Period. And certainly given the combination with inverted yield curves, so banks are unable to hike deposit rates, right? So otherwise they'll lose profitability. So deposits are flooding out of banks in search for higher money market yields. So because front end rates are just simply sort of too high and the banks can't handle it. So to kind of meet that deposit outflow, banks are having to sell assets to basically meet their liquidity needs. Now, the problem is a lot of those assets they're holding are underwater. And, partly through regulatory reasons, these banks were all forced to hold a load of treasuries. And then the Fed hiked like they've hiked. And now this stuff's underwater. Now, because this sort of BS accounting, practice we have where if they're deemed held to maturity, banks don't have to mark them to market. They can hold them on the balance sheet at par. Everything was fine until they needed to start selling some of these assets that are underwater to meet the liquidity outflows or the deposit outflows. And all of a sudden they've got a solvency issue, which is exactly what we saw with SVB. So consequently, the Fed are the ones now again having to supply liquidity. Otherwise, the whole system blows up. And we never really got away from that. And this is again being part of my sort of bigger picture thesis for crypto, that we'll be forever needing central bank liquidity to kind of keep these markets alive. So in terms of where I think it goes from here, I kind of feel like that front end rates is too high. So whether it looks like Powell's probably going to go 25 tonight because the market's allowing him to do so, I think he should pause, because again, the issue, the cause here is that front end rates are too high. And then the liquidity sort of measures, the BTFP and what have you, they're addressing the symptoms, but they're not addressing the cause. And those symptoms are going to grow, and the need to address symptoms is going to get even bigger the more they hike rates. So front end rates simply need to come down. I think Fed hikes today 25 just because market is kind of allowing them, and they're a little bit confused. What do we do about inflation? We still want to sound credible on that front, but those two levers for me are kind of competing against one another. The idea that the Fed can simply hike rates to address inflation, but then pump the market full of liquidity, I just don't think it can happen, because what you're going to see, the more they hike rates, the more you're going to see the sort of deposit outflows accelerate, which means the more there's going to be banks tapping these liquidity tools that the Fed are offering them. So what you're going to see is the banks, the central bank and the Fed's balance sheet is going to explode. And it's going to explode higher the more they carry on with rate hikes. And as the central bank balance sheet explodes, you're going to see Bitcoin explode. So, I mean, how I see this plays out from here is ultimately the Fed are going to have to pause. I think they probably hike today, and then that's one last hike, and then the end of that cycle. But even if they pause today, ultimately the only way this reverses is if they cut rates and get them down pretty quickly. Now, obviously, they kind of can't do that right now because inflation's not allowing them.
That would spur a lot of panic. Like even your point around like, oh, they keep interest rates flat today. Well, I think that would tell the market, oh shit, maybe there's something that they know that we don't know, and things are actually a lot worse than appears on the tin. And things on the tin appear pretty freaking bad right now.
Yeah, I mean, it's funny because like you start going through all these iterations, and then it's kind of like, but then if we know that they know that, like,
right.
and it all gets a little bit silly. I mean, because equally, then like if you're hiking rates because we know you're hiking rates because you don't want us to know that there's a problem, then that becomes a problem. I kind of think at this stage it doesn't matter, and I know it's controversial to say ahead of a Fed, and I could end up looking very stupid, but I think what they do tonight actually doesn't really matter, and I don't think what Powell says actually really matters, because I think he's lost control of the narrative and he's lost control of the policy.
Right.
The market is now firmly in control. I think if he hikes and he tries to sound a little bit too aggressive on inflation or what have you, then banks are going to get absolutely smashed. And then we're going to see the next sort of reading for the Fed's balance sheet, and it's going to increase another 300 billion. And all of a sudden, pretty quickly, we've wiped out an entire year's worth of quantitative tightening. So I don't think it matters. And given my view that rates and liquidity are what drive markets, the liquidity tap is on now, and I don't think they can turn that off. And the only way it potentially gets turned off is if they, very, very quickly get front end rates down / rates, which they're not going to be able to do. So I think whatever he does tonight, pause, hike 25, maybe even hike 50, aside from like the knee-jerk reactions, I think quite quickly markets are going to settle back into, right, this just means more and more liquidity is coming back into the market to essentially effectively bail out the banks and address those liquidity issues. And liquidity, we all know that Bitcoin and crypto is a liquidity junkie. So I kind of actually still see an asymmetry for Bitcoin and crypto to trade higher, whatever he does at this point. And again, whatever he says, like if he's really aggressive, I actually think markets then are going to price in a bigger policy mistake, and we're going to see rates at the back end start to come much sharply lower. So I kind of think he's lost control of the narrative at this point. And sometimes the best thing is do nothing, which he's probably not going to do, but eventually he'll have to. But yeah, in terms of crypto, look, the liquidity tap's on. They're not going to be able to turn it off anytime soon. I came into this year bullish crypto on the back of this peak inflation, peak rate narrative.
You might get it.
And yeah, well, I was going to say, right. So I was bullish on crypto on just that narrative. Basically, the Fed pausing. I didn't actually think they'd be cutting rates this year, but I thought we'll hit the pause. I felt liquidity was at its tightest levels. So liquidity would just ease marginally, and that QT would probably end up stopping at some point. And we've seen the offsets as well. PBOC, BOJ expanding their balance sheet, which has offset what the Fed have been doing. So I came in bullish on that narrative. Now we've got a narrative that not only are the Fed going to have to pause, but potentially cut quite aggressively towards the back end of the year. We've now got a full unwind pretty much of the balance sheet contraction and the quantitative tightening. And now potentially we have an explosive expansion of that balance sheet. So if I came in sort of quite bullish for crypto at the start of this year, not foreseeing some of these banking issues, I mean now this is that on steroids for me. So yeah, I think we're just getting going. I still don't think the positioning is there in crypto, and I think you see that it's very grabby, right? How people are trying to chase these moves as they come. Markets came into the year under positioned. You're seeing that in equities as well. Markets are under positioned equities. I'm actually relatively bullish on equities as well. Again, function of rates and liquidity. So liquidity taps on. I think we're just getting going.
Yeah, and not to get existential here, but like what's been happening with these bank bailouts, you think this is just going to perpetuate this whole moral hazard problem that we have, where it's like, oh, I don't need to actually really care too much around hedging my duration risk, because at the end of the day, there's just going to be a lot of money thrown out of a helicopter at me anyways.
Yeah, look, which
I think further strengthens the case for owning crypto, right?
Yeah. Look, at the end of the day, the 2008, the fiat system reached its endpoint, its natural endpoint, and it should have reset. But that obviously, which I get, is a very difficult decision for anyone in a position of power to sit back and let happen. We would have maybe been looking at depression and all those things. So they kicked the can down the road. They flooded everything with liquidity. They artificially inflated asset prices because that was the collateral underpinning the entire financial system. And once you open that door, you can never fully shut it. And we go through these little periods where, okay, things look pretty calm. They think they can start hiking rates, withdrawing liquidity. And pretty quickly, it doesn't take long before things blow up. Now, we saw that in 2019. If you remember, we had the repo blow up. And that was when they lended not QE, but basically it was QE. And the market cannot get themselves off of the Fed liquidity. And the ultimate byproduct of that is the currency debasement. And so fiat currency is going to essentially be the escape valve, which means Bitcoin is all kind of assets, I think, are going to go up. I think NASDAQ's going to go up. Gold's going to go up. But then Bitcoin obviously is the kind of the exponential asset with the high beta asset that's going to absolutely fly on this. So I think we've reached the limits of what the Fed can do in terms of trying to address inflation. They now hope and pray that that inflation comes down. I actually do think it will come down because there's nothing more deflationary than a banking crisis. Right. Lending is going to freeze at this point. You're talking about a full-on credit crunch. So quite quickly you'll see growth come down pretty rapidly, and inflation with it. I'd be amazed if Powell has to allude to that tonight, in my view, like that your outlook from this point must be different to everything it was 2 weeks ago, because you've got to kind of see the transmission from what's going on in the banking system into the real economy. I know they're going to have these stale kind of forecasts where they were going to ratchet up expectations for inflation and everything based on 2 weeks ago. But they're kind of irrelevant now, because you're probably looking at a much more quickly disinflationary regime than what we had. And certainly, hopes of avoiding a hard landing look pretty slim at this point. And for a Fed that had already acknowledged that things were becoming a little bit more two-way in terms of the balance of risks, well, guess what? The balance of risks have now skewed massively to the downside. So I think Powell needs to be cautious, otherwise he's just going to sound a little bit stupid.
Right. Okay, awesome. I think that is a great place to leave it. We covered crypto vol, microstructure, and David, you crushed it on the macro as always. and Chris, thanks so much for joining us. Providing your input around crypto vol markets is super interesting. Always love having you on.